Hello, good morning, all of you. Welcome to today's session where we will delve into the dynamic world of finance. From business finance to corporate finance, we will explore the various types and their essential roles in financial ecosystem. The term finance has been derived from the Latin word finis, and it has been derived from the old French word that is fin, which means it is fine. It has been taken originally or meant it is the end. The French word for finance came to mean both payment and ending. But in the 18th century, the English adapted it to mean the management of money, which we are now considering. So it can be defined as the art and science of managing money, and it is also referred as the provision of money at the time when it is needed. It is considered as the lifeblood of economic activity, lifeline of any businesses. You know that a new or growing business may need a substantial amount of money to meet its all sorts of requirement for the smooth running of its business activities and for other finance functions. Each and every activity will begin with cash and end with cash itself, since money is the medium of exchange to deal with all economic or financial activities. So now we will look into the types of finance. There are different types of finance, but I have categorized into business finance, direct, indirect, public, private, and the corporate finance. So now let's start with the fundamentals. We will be look into the business finance. When it comes to the business finance, it is a broad category which will include various types. It can be direct or it can be indirect finance. So when it comes to the direct finance, it involves the direct interaction between savers and borrowers. Think of any business, they want to raise the capital, so they will go directly from the investors and through mediums like it can be any medium, maybe issuing stocks, bond, debentures, or any other ways, but there will be no intermediary. The savers and borrowers will meet directly and get their money financed. That is the direct finance. When it comes to the indirect finance, it is the flip side. Flip side in the sense, indirect finance involves intermediaries, maybe finance banks or any other financial institution when it will be involved, and the savers and borrowers in between there will be a middleman. It may be bank, maybe financial institution, which will act as a middleman, which will channelizing the funds from savers to borrowers. Loans, mortgages are the classic examples of the indirect finance. Next is the public finance. So public finance focuses on the financial activities of government entities. It can include budgeting, taxation, government expenditure, to manage public resources for the benefit of the society. So whatever the expenses, whatever the money is related to the government entities, it will comes under the public finance. It may be state, it may be central finance, central government, which will be comes under the public finance. Next is the private finance. It is on the other hand side, the private finance deals with the financial management of individuals or any businesses. It's the personal or corporate side of finance which will address personal investment, budgeting, corporate financial strategies. So private finance mostly for the businessman or the personal finance it will be included. Last, on the corporate finance. It is a vital subset of business finance which will focus specifically on corporations and their financial decisions. So corporate finance involves managing a company's capital structure, financing decisions and investment strategy to maximize the shareholder value or wealth of the company. So, corporate finance professionals are tasked with crucial functions such as capital budgeting, risk management, determining the optimal mix of debt and equity to fund the company's operations and growth initiative. So, these are the types of finance. It may be business, it can be direct, indirect, public, private, or corporate finance. Thank you.